Hey, how's it going, everybody? Mark Lozano here, Christ Center Capital. You guys know the whole spiel. With the weekly video this week, our weekly three, those three assets that make it into our curation report, and we put through moral analysis. This week's report completely different from reports in the past because we don't just do three assets. We did three kind of topics, and that was mostly because when we do our curation reports, sorry, these videos I ramble, right? When we do these curation reports, I see what the market's recommending. Me and my team, and we see what the market's being recommended, and then we put those assets when it reaches some sort of consensus through our moral screening process. Well, this week we realized, and during this report, that every single asset we've gotten, now this has happened before, but every single asset we got was on the S&P 500, and it was mostly because there's been a lot of talk within the market right now due to inflation and where the market's headed and all that kind of stuff right now. The Fed rate just came out again, the 75 basis points. People look to the S&P 500 and see what's going to happen with the market in the future, and they try to predict, and they take out the things that are propping the S&P 500 up and the things that are weighing it down. So our weekly three, I'm going to take you right over to the website now so you guys can see. This post is not live yet. Still needs to go through some editing. But what we started talking about was, what are those five? So the first part of the weekly three, the number one part, the one in that three, is we talk about the worst performing stocks in the S&P 500, right? And those worst performing ones are Netflix, Align Technology, Carnival Corporation, PayPal, and Meta Platforms. So these are the ones that are kind of weighing down the S&P 500 over this kind of, 8 month to a year-ish span that's been kind of bad for the market. Four of those five are fail our moral screening process, and you're like, what does that matter? Because they're kind of weighing it down. Well, the general consensus is that a lot of I think at least four of these five companies they receive favorable buy ratings from the market and analysts, and you can go on your Robinhood and check the buy ratings. Like four of these, or maybe all five of them, actually receive favorable buy ratings right now because they're still S&P 500 companies, but they're kind of on the downturn, and a lot of people think, hey, there's only one way to go, and that's up, right? Now, obviously, that's not entirely the case. I mean, Netflix has a very big battle ahead of them in the streaming wars. We've always talked about how we're kind of secretly rooting for Netflix here at Christ Center Capital because the alternative is that Disney and Hulu win out, and Netflix is not that Netflix is a great company, but they've definitely offered a lot more resistance to that, as Elon Musk coined it, that woke mind virus. And Disney and Hulu have offered no resistance to that whatsoever. So even though Netflix isn't a good company, we're still kind of rooting for them in a weird way. And then Carnival Corporation, that's kind of they score a perfect score on that. I'll try to highlight it for you guys. That Carnival Corporation, they receive a red rating just because they offer gambling, and they receive a perfect score on that HRC equity index, quality index. PayPal, they do a lot of matching with gifts to Planned Parenthood. Plus, they're a supporter of the Center for Reproductive Rights, which you can probably guess just by the name of that what it's supporting. Meta Platforms, do we even really need to talk? There's so much going on there. We just gave a couple highlights of why they got a red rating. However, you see this one gold company. We don't come across gold companies too often, but Align Technology, people know them because of Invisalign, right? So they're an orthodontics company. They just do what they do, and they do it well. I mean, they're down because people weren't really spending money on braces or anything like that. As the economy goes down, they don't see that as a necessity, and for a couple other reasons, right? They had a pretty bad year, but they're still receiving a pretty good buy recommendation from the majority of analysts due to just their domination of competitors. I mean, they think when the market does turn up and people are willing to spend money on orthodontics and braces and Invisalign and whatnot, then Align Technology is probably going to excel. So those were the five worst performing companies in the S&P 500. Moving right on, The second part, so the five best performing companies, we'll just go through these really quick. We have Occidental Petroleum, Coterra Energy, ExxonMobil, Enphase Energy, Hess. You're starting to see a trend, right? It's energy companies, oil production, oil and gas, right? Wonder why these did well. Well, because the price of oil went through the roof, the war in Ukraine, like all that kind of stuff. It's why the best performing companies in the S&P 500 were, of course, oil and gas companies, right? However, you can look at this and there's a mixed bag, right? We got one purple rated company and Coterra Energy. To be honest, we just didn't find enough information about them where we felt comfortable recommending them, but they didn't turn up any red flags. That's why they got the purple rating. We have two gold rated companies here because they're just companies that, I mean, we perceive energy as being for the common good and producing those in a responsible manner as best a company can. Both Occidental Petroleum and Enphase Energy, they're two opposite sides. I mean, Enphase is solar panels, Occidental Petroleum is petroleum. But they both receive a gold rating because they're not really supporting or making any donations to things or extracurriculars that are turn up red flags for Christ Center Capital. And one of the bright side is they've had a really good year, but I mean, still analysts are pretty favorable with them, right? They have some good buy ratings on a bunch of different platforms for both these companies. So we've added them to our major ethical asset uh, list that has passed our moral screening processes. Enphase was actually already on there. Enphase made it back on our curation reports a while ago. I think even before, while it was still 2021. And then Exxon and Hess, they're just Equality Act supporters. They're doing a bunch of matching gifts to Planned Parenthood. I mean, Exxon is even a partner of the Population Services International, and you can click that link when this post goes live. They do a whole bunch of nonsense. Moving on. So within that, so now what's the most highly recommended companies at the current time, which would be the first week of August here, within the S&P 500 right now. So this is that third part of our weekly three. And unfortunately, the top three recommended ones, none of them got a gold rating. We have Etsy. Etsy's flirted with that purple score with us before. They do have a perfect score on the HRC index, but they don't actually support any LGBT legislation or anything like that. The reason Etsy's being recommended right now is because of market dominance in their field, their scope. The one problem with Etsy is they've caught a lot of flack lately because they're supposed to be for kind of the small business out of your basement making something, selling it on Etsy, and they let some corporate people, some corporate businesses and stuff start selling products on their platform, and a lot of people got really pissed about that for a good reason because if you want to sell something if you're a corporation, you want to sell something, I mean, go to Amazon and whatnot. Etsy's supposed to be for those mom and pops. And then the other two on there is Berkshire Hathaway. Now, Berkshire Hathaway does do a lot of LGBT philanthropy, but they actually don't do in of it themselves a lot of bad in their extracurricular work, but their natural business is something that C3 doesn't feel comfortable backing because their natural business is investing and consolidating and owning a bunch of different businesses, or portions of businesses that do a lot of bad, right? Because Warren Buffett was even asked about ESG investing, and he said he doesn't really care about it. So moral Christian investing hasn't even entered his mind, right? And then the last one, Walt Disney, they're right up there with Meta Platforms. Do we even really need to list anything? I mean, the one sentence we got going on right here, there's like 4 different links, and I mean, they're transgender activism, gay content for kids, LGBT legislation, all the child grooming narrative there, and I mean, the content they produce is just. And that's just talking about what they're doing. I mean, you're talking about like some extracurriculars. I mean, $2 million to NAACP, which is supporting a bunch of things that are counter to Christian morality. They're an HRC partner. They're the ones kind of helping do those HRC index scores. Planned Parenthood donor. opposes parental rights and educate the parental rights and education bill. So parents wanting to know what's being taught, and they're like opposed to that. So Disney is obviously a very easily rated red company. But that's all I'm going to talk about today. That's what we had. So this week's weekly 3 posts talking about investments, where we really dove deep into the S&P 500 because we just realized, hey, everything that's being recommended is S&P. So why don't we just talk about that a little bit? We'll talk about the best performing, the worst performing, the ones that are actually recommended. Again, this post will go live, I believe, on Wednesday, if it's not live already by the time this video is done. And for anybody out there who has not seen it yet, we do have, let me, hold on 1 second. So yours truly got a interview with a prominent YouTube channel. Let's see here. We'll do this. Bear with me here for just a second. But yeah, yours truly got on Capturing Christianity with Cameron Bertuzzi. He's a very thoughtful Christian apologist and speaker. And he did an interview with me talking about my conversion story while I was working at the NBA and what I'm doing now for Christ Center Capital. And it was a really awesome interview and definitely generated some big buzz around around C3. It was really appreciated. It was awesome. We got a whole bunch of new newsletter subscribers. Got a whole bunch of new donors to C3. We're gonna have to update our goal there on the homepage of how much money we've raised. But it was extremely helpful, and I highly encourage, if any of you haven't checked it out, if nothing else, it lets you know a little bit about me, and you probably should know more about me, given I'm constantly talking about finance, and if you're actually putting any of information I'm giving you into practice. My time at the NBA, my conversion story, all that good stuff. So if you haven't checked that out, go check it out. We'll leave a link into it and everything. But as always, thank you for listening. I apologize for the rambling, but I appreciate you guys just tuning in, and I'm praying that more and more people just start putting more action to that moral investing. All right, thanks, and God bless.